Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast. So today we're going to talk about due diligence on commercial property. And obviously it's really, really important to make sure that you do all the checks and balances on any investment you make, but in particular with regard to property, commercial property or residential. There's obviously a lot to think about with regard to the property and making sure that you don't make a really expensive mistake. So today I want to take you through some of the categories of research you need to do. And at the end, and in the show notes below, I'm going to give you a chance to download my due diligence checklist, which hopefully should help you with your commercial property due diligence. So let's get going because there's a lot to cover in this. So I like to call the first stage of due diligence the 5 R's. So first of all, it's research. It's research into what do you want to invest in? And, we've talked about niching before on this show, and it's really amazes me how many people literally will just be very deal led, will have no strategy behind what they're doing. And actually, it's really important to be highly strategic. You wouldn't see big corporates, you wouldn't see family offices, high net worth individuals just being super scattergun when they're investing. So the research you need to do is, first of all, kind of working out where you want to get to. What are you looking for? Are you looking for passive or hands-off income? I don't believe in passive income, but hands-off income. Are you looking for cash flow, profit or equity? Do you want to do development or investment? Are you happy to add value, or do you just want to, kind of relatively long lease with hands-off income to a tenant? So determining what you want to begin with, and then doing research into the locations, the strategies that you can employ to make sure you do that, as well as, trends in local areas, because ultimately with property, we invest in a location. And so in a location, we need to understand supply and demand for tenants. We need to understand what's happening. Is there one major employer that the whole area is reliant on, or is it a growth area? Is there regeneration? Are there grants? Is it a free port? Is there new housing going up? Because obviously that can have a big influence on commercial. If you're looking, for example, to invest in an industrial estate, is there planning for 6 new industrial estates in the local area? I'm kind of being slightly churlish to demonstrate the point. You kind of read the local papers, look at the local plan, look at the local authority website, speak to local agents, speak to local stakeholders, and really understand what's happening locally. Because, I think it's amazing how many people stumble into investing when actually there is really accessible information these days, where you can find out all of the information you need to know. And really, really importantly, go and visit the location. It's amazing how many people invest without actually seeing properties, understanding locations, etc. So for example, if you want to invest in retail, and you go and investigate the town or the city, work out whether you're in prime, secondary or tertiary pitch, work out where the footfall is, what's the car parking situation, is there out of town retail that's competing with the town centre? Is there a shopping centre? How many shopping centres are there? This is all about supply and demand. So do your research into your investing location or proposed investing locations to make sure that you understand the fundamentals of the location that you're investing in, exactly where in that location you want to invest, because obviously all locations are not made equal. And your location can determine tenant demand, ability to get longer leases, ability to get better rents. So you want to really understand all of that. So that's the first R, which is research. Number 2 is requirements, and that's very much linked into this research. So supply and demand is so important with regard to commercial property, and location governs, and type and configuration of unit governs the requirements. So make sure you understand that. The ways to find that out are through commercial agents, contacting tenants direct, speaking to local tenants if that's your market, speaking to blue chip tenants if that's your market. You can also be tenant led in your acquisitions, where you can actually go and acquire to order, so lots of tenants publish their requirement list. In fact, there is a website called www.therequirement.list, which basically will list all these requirements. So you can go and find out the requirements. But crucially important, if you've got a property where there is little tenant demand, you're potentially looking at long voids, you're looking at low rents, you're looking at short leases, and all of that's going to affect your investment value. So it's really important to do research into requirements. And then number 3 is routes. When I say routes, I mean multiple exits. There's a previous podcast episode all about multiple exits in commercial property, so I won't go into loads of detail now, but basically what we look for in commercial is multiple exits to make sure that, if exit A doesn't work, then we can rely on B, C, D, E, etc. So that could be, for example, buying a shop unit with a tenant in place on, say, a 2 or 3 year lease. Number 1 could be just keeping them in place and renewing the lease. Number 2 could be splitting that shop unit up into separate units. Number 3 could be maybe combining it to make a larger unit. Number 4 could maybe getting rid of the uppers, converting the uppers into other commercial uses. Number 5 could be converting the uppers into residential. Number 6 could be chopping the back off the shop unit and creating another use, whether that's commercial or residential. And, I could go on. So that's the really, really important thing. And then obviously we look at other things like title splits, ways to finance each of those exit, and make sure that each of those actually stacks. And then we want to look at, that leads us nicely into returns. So returns is really important, because obviously we're not going to buy something if it doesn't deliver the return we want. So the first thing we need to determine is, what return are you looking for? If you're leaving equity in that property, what return do you want on it? 20%, 10%, 30%? And also, kind of, what kind of yield do you want? If you want a 10% yield on a property, there's no point looking at prime food store type properties. So, it's really important it will determine strategy as well. So returns are really important. And then we obviously speaking to finance brokers and banks to see whether that every angle you're looking at is financeable. And then the 5th R is relationships, because relationships are so important in commercial property. They can really broker all of the above, all the R's. And so therefore, building relationships is really important. So that's the 5 R's. It's research, requirements, routes, returns, and relationships. So that's kind of the basic 5 R's.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
So then we do our property specific. So we've looked at the locations, we've looked at the returns, etc. And there's other kind of more granular type of research that we need to do. So speak to commercial agents and looking at comparable yields, looking at comparable rents, looking at what rent-free you might need to give away, looking at the tenant type, and not just kind of, when you speak to a commercial agent, don't just say, is there tenant demand for this? It's kind of, what kind of tenant, what kind of covenant, what kind of lease length could I get? What rent free would I need to give out? What rent will they pay? What kind of lease terms am I looking at? It's getting really, really granular in terms of that kind of research. And ultimately, that's all down to supply and demand. That's down to your choice of investment, your choice of investing location, and your strategy as well. So you want to work up basically all your angles before you buy, and you want to check that with commercial agents, look at comparables yourself. So prop tech can really help you with this. Things like Searchland, Nimbus, CoStar in particular are really, really good. The requirement list I've already talked about. So prop tech can absolutely be your friend, but there's nothing like boots on the ground in terms of actually working out kind of how a location ticks, the quality of a property, and how it works. And then, of course, things like socioeconomics locally will determine, whether you're going to get a nice high-end operator or whether you're going to get a bargain discount type shop. That's all the kind of stuff we need to look at. So, yeah, and then obviously when we need to stack our deals and in terms of what returns are we looking at, and how can we add value, and then that brings us into property finance, because then we need to look at can we finance all of those angles. So one of the very first things I do when I'm working with a client is saying to them, refer them to my broker, the sponsor of this podcast, Callum Brooks at Bond Finance, who will always spare time to basically talk about the financeability of the investor, but also the finance that can be achieved on the asset. And just making sure then that once you've got that kind of view on the finance, you can then actually put that in, plug that into a deal, and have a good deal stacker as well, which we have on the Commercial Property Academy. And then when we secure a tenant, or even if there's an existing tenant in there, so one of the first things we do is we speak to the tenant, find out how they're trading. You can do that on a viewing, or you can do that kind of direct. Very often when you ask a tenant how they're trading, they'll say to you that it's the worst store that in their whole portfolio. Take that with a bit of a pinch of salt. There's obviously a reason why they're doing that, because they know that you're the landlord, and at some point you might want to put the rent up. Call me a cynic, but equally, if you speak to store, if it's a retail unit, for example, you speak to store staff, they're usually pretty honest about how they're doing. But having an honest discussion about, are you going to want to stay at the end of the lease? How are you trading? How's the trend been of trade? Really understanding it. And then when whether it's a new tenant or an existing tenant, you need to do covenant checks. So the covenant is the quality of the tenant. Look at their accounts. Look at their other leases. What are they agreeing elsewhere? Look at what guarantees you've got in place. Definitely Google them. Do credit checks on them. And if it's a new letting, you want to be, especially if it's a small operator, you want to be securing some kind of guarantor, personal guarantee, rent deposit. And if it's a blue chip, ideally you want to go for the parent company rather than a franchise. Obviously, sometimes that's just not possible. But, the quality of that tenant is basically securing or not your future rent roll. So it's really important to spend some time on it right now and really, really understand it. Other things you need to look at are in terms of insurance. So is there insurance? Who insures? And, has there ever been any claims? Are there any problems in getting insurance? What does the lease say about insurance? What about uninsured risks? There's a load of questions about insurance. If you want to listen to a previous podcast, the one with Josh Munt from Insurance Desk, that's a really nice podcast about insurance if you want to have a listen to that. I talked about finance, so obviously speak to a broker, speak to a lender, but also, work out in terms of what equity you need for a purchase. There's no point even starting if you don't think you're going to be able to raise the finance, the equity levels. So determine your strategy as to what the art of the possible is. Having said that, I think mindset can block a lot of people on finance as well. So just be aware of that. Sometimes people play small because of mindset. Whereas if it's a great deal, if it's a good deal, then, as long as you know the right people, you potentially will get it financed. But, are you going to do JVs? And obviously there's a load of due diligence you need to do on JVs. And are you going to bring investors in? Make sure you've done all the FCA checks, etc., for investors coming in, anti-money laundering, etc., etc. And then we look at the property itself. What's the repair? So you can look at it very much on a viewing. You can see what the repair is of the property, but also you need to have reference to the lease. Is it the landlord's responsibility to repair that? Is the common parts, or is it the actual demise of the tenant that the problem is? Therefore, is a dilapidations survey needed? And a dilapidations survey is basically where you look at the tenant's repairing clauses in the lease and then work out whether they've actually complied with them. And you can serve something called a schedule of dilapidations on the tenant. And, look where the landlord's liability is. Are there any caps on service charge, which means that the tenant's not liable for the roof? Is it an internal repairing lease rather than a full repairing insuring lease? Again, which means there's liability on the landlord, and make sure that's in your numbers. If there's caps on service charges, if there's landlord's liability for repair, then make sure you've got that capex in your numbers. So definitely get a structural building survey done. Maybe site surveys, environmental surveys, depending on the site. For example, petrol filling station, you want to get some, I would suggest you want to get some on-site boreholes, or kind of at least phase 1 environmental survey prepared. M&E survey, fire risk assessment, electrical survey, environmental ground survey. Definitely look at asbestos reports, asbestos management reports. So on every commercial property, there needs to be an asbestos management report that the tenants have in their possession, so they know that they can't knock holes in roofs with asbestos or whatever. And then, find out what repairs and maintenance are being carried out on that particular property over time. Find out who did that. Also find out if anything's been promised to the tenant. This is where communication with the tenant before you buy is really important, because if the tenant's been promised a new roof and you don't deliver, that's not good. That's not going to be great for relationships. What parking facilities are available? Are they provided free of charge? So the lease is your friend with all this kind of stuff, because it will govern what the demise of the tenant is, what they must and mustn't do, and what the landlord must do as well. Also look at planning permissions. So I have a lot of clients coming to me saying, oh, this is Class E and I'll be able to convert it into residential. Well, actually, there's a dry cleaner in there, or a betting shop, which are sui generis uses. So make sure you understand what the planning use is. Look back at history. PropTech's really good for this. You can also speak to planning advisors, look at Google Maps, see what it's being used for over time. See where the permitted development rights are applicable. In England, obviously, can you use Class G? Can you use Class MA, etc.? Is the property listed? Is it a conservation area? Because that potentially will restrict what you're doing. Have all the historic consents been obtained, or is there other extent conditions outstanding on alterations? What about building regulations? Have they complied with building regulations? A classic is kind of the division between a commercial unit with a residential above. Are all the necessary insulation, soundproofing, and fire risk, fire protection in the ceiling, in the floor? It's really, really super important. So definitely do that. And then in terms of legal, you will receive, if you're buying a property, something called the CPSEs, the Commercial Property Standard Inquiries, that the seller will fill out. You will get a report on title from your solicitor, which will include ownership title, boundaries, charges, mortgages, etc., results of searches, rights, covenants, obligations, liabilities, existing and required insurances, a breakdown of the lease and what it includes, any legislation affecting the property, is the lease inside or outside the act, for example, any remedies or defects or omissions in the lease or in the title, any consents for purchase or charging requirements, replies to existing planning consents, any unusual issues like defective titles, etc. So you would expect that from your solicitor. Definitely always get your solicitor to read the lease. But I would also recommend, if you don't understand leases, getting a surveyor to read it, because there's the kind of legal interpretation and then there's the practical interpretation. And, a bit of a top tip, I would definitely say to you, get au fait with leases. If you can, read as many leases as you can and really get your eye into them. It will save you a lot of money, but also you'll really start to understand commercial leases as well. And then, in a commercial lease, understand the main lease clause. Is it inside or outside the Act? Which means that the tenant may or may not have security of tenure. What are the repairing obligations? What's the term? Any break clauses? What's the rent? Any provision for rent review? Any kind of, what's the insurance requirements? Redecoration requirements? Any service charges? Any limitations on service charge recovery, etc., etc. And then tax, property tax. So there's a separate episode on property tax. But assessing, is VAT payable? Have you seen a copy of the VAT certificate? Have you set up a VAT company? Or can you make it a trading as a going concern, a TOGC? Structure is really important. One of the first people I speak to when I structure a property transaction is our accountants, because they will, we'll talk about whether we need to do it in a separate limited company, whether, how we structure it, do we title split, kind of what are the implications? What about capital allowances? Capital allowances are super benefit for commercial property. If you're buying in a SAS, then what's the potentially better tax implications, but you need to understand that. And then, just make sure that you have a list of documents and you've got everything that you need. But just some general rules. Always visit the property. Don't buy a property without seeing it. It's amazing how many people do that, especially at auction. Always meet the tenants more than once before you buy the property. Talk to them about their future plans, how they're trading. Have a commercial property lawyer and accountant, professional team. Always appoint a capital allowances surveyor before you buy the property so that you can put the right wording in the lease, and you can work out what you're doing. Get a planning advisor to advise you if necessary as well, and do all those tenant checks to make sure that their covenant is okay. And then when you buy a property, then get rent authority letters, which basically say to the tenants that they're paying the rent to you, not to the previous owner. Tell the local authority, potentially, especially if it's vacant, about business rates. Make sure you've got insurance from exchange. If the property is vacant, again, speak to utility companies. If it's not, then obviously they'll carry on. Set up managing agents, set up a service charge. And obviously celebrate. That's what it's all about. It's about doing deals that we're proud of and that we can celebrate. So wow, that was a bit of a whistle stop tour through due diligence, and don't be overwhelmed by that, because it's just anything you do on any property purchase. You need to make sure that you're doing checks and balances on everything. So as I say, what I've got is a due diligence checklist that includes all of this stuff. If you would like a copy, click the link below, and we're really happy to get that over to you. You can download it direct from the web link below. And don't be intimidated by this. Don't use this as a mindset barrier to thinking, gosh, it's far too complicated to invest in commercial property, because ultimately you'll be doing very similar things if you're buying a residential property as well. So this is just stuff that you need to be aware of. That there's different things you need to be aware of with commercial, like tenants, like tenant demand, like leases, etc. So the number one thing I would say is the most important is definitely supply and demand. Super important for ascertaining whether a commercial property has got a future and whether it's going to make a great investment for you. And ultimately, you need to make sure you have those multiple exits. You've got a great story about how you're going to asset manage or develop that property and make sure that you can secure property finance on it. So best of luck with your commercial investing. A bit of a whistle stop tour today through due diligence, but the checklist will make it easier. So do download it now, and I look forward to seeing you next time.